Yeah, this is a topic that is at the forefront, I think, of what we need to be talking about in Congress. Look, there's no question that parts of the financial industry got ahead of itself leading up to 08-09, but let's remember that the basic instrument that caused that was created by the desire back in the late 90s to increase home ownership, and things like no-income and low-income verification loans were created that started defaulting almost immediately in the 40% range. But rating agencies, all that, that's not the direction I want to go in today. Dr. Spriggs, I couldn't agree with you more. Your testimony today I thought was pretty much right on. I agree with most of it. But I want to come back to a question about small businesses. It looks to me like over the last 70 years, since 1946, as you well called out, Dr. Spriggs, our economic miracle, which, by the way, is the largest in the history of humankind, for all Americans, basically, was created by innovation, capital formation, and the rule of law. Ms. Del Rio, I agree, though, that there was an imbalance in that growth. It had to do with a lot of things, geographic issues, racial issues, et cetera, et cetera. But by and large, those are the three things that created this. Today, unfortunately, I think that our unilateral chase toward Basel III, when these other countries are not doing that as well, we've required our small and regional banks to have capital requirements that are well beyond any reasonable level that would require, that they should be required to be protected. They didn't have anything to do with the debacle of 09. They were not levered up 67 times like some of those guys were. And today, the impact on small business, and this is the question I have for Dr. Heller first, is that small business today, we have around 650,000 missing, as I calculated, small businesses today. And this is from the Bureau of Census, that if you take the jobs created from 1977 through 2007 and extrapolate that forward to the number of businesses that small businesses we should have today, we have about 650,000 fewer businesses today. And that is a steep fall from 2009. I would argue that that's probably caused mostly by a lack of capital. Innovation hasn't fallen off. The rule of law has not been changed much. So it's basically access to capital in small communities that I'm so familiar with. Can you address that? You're on the board of a community bank. You just answered the question about Dodd-Frank, but I'd like to know about the capital requirements for not just small community banks, but also regional banks that had no part in the debacle of 2009. Could you address that first?
Serious problem, as you say. First of all, community banks with about 300 to $400 million in asset size. They have a very, very hard time surviving, and they are merging incessantly. They are going out of existence, and they get swallowed up by either like-sized institutions or by larger banks that are around.
In my state alone, we've lost 90 banks, small banks, since 2009. They had nothing to do with their financial position. It had to do with the cost of compliance, and it made them an extremely attractive target for a bigger bank. So it looks to me like what we've done is incented the consolidation of an industry where we want to break up larger banks in theory, but the reality, the unintended consequences, we've done just the opposite. Do you agree?
And to make it worse, Senator, every year, typically, we have between 150 and 200 new banks being formed, and that stopped totally with the imposition of Dodd-Frank. Since then, there have been virtually no new bank formations. In the last 5 years, there were 2 new banks, the last statistics available from the FDIC. So no new banks are replacing the ones that are disappearing, and so you get exactly the effect that you point out. Small bank lending to small corporations, to small customers, that has come greatly to a standstill. And recently we've seen, for the first time in U.S. history, that the exit of small corporations was larger than the formation of new corporations. So there's no new lifeblood coming into the country because more companies are exiting than entering, paralleling the scene on the bank side.
Mr. Powell, the estimates have been made that this is somewhere around $2 trillion that's not at work in the economy right now, that's on the balance sheets of small regional banks. I don't know if you've seen that number or not. Do you agree that there's a significant amount of capital that should be released into these small communities?
That's a complex question. I think capital will follow opportunity. I think in the community banks that capital is not an issue. I think they have plenty of capital to loan, and I think they have money to loan. I think the issue is more complex than that, Senator. I think part of it is the regulator oversight, the tone, the mood, the environment. They have to be very, very careful. I think complying with certain standards, complying with certain laws and regulations is in fact a burden. And I might add that the small business person has the same thing. So one of the reasons that people are not creating new businesses is not necessarily for the lack of capital, because they can get the capital from outside banks.
So you think the regulatory environment has something to do with that?
Yes, sir.
So here's the final question. I'm out of time, but I'd like to see this answered in writing if you all don't mind, and that is the true cost of compliance is lack of jobs in local communities. And I'd love to know what we can do. What are the priorities you guys all see on all sides of what we could do that doesn't change the intent of what we needed to do after the 09 debacle to fix the problems we had there, but that would release some of the problems we have and the unintended consequences in these small communities. Thank you very much. Thanks all.